A very visible and visceral reaction from markets to US policies, but it's very interesting to see from the consumer side what impact it's having, and these little acts of activism from consumers who have decided to turn their back on certain US products.
What if billions of dollars disappeared suddenly as America's closest ally simply chose to seal its wallet? That is the startling truth that is currently playing out in North America. On the surface, there aren't any marches, protests, or popular hashtags on social media. Rather, Canada has seen a silent but destructive consumer uprising, one that is upending the basis of corporate domination in the United States. An Angus Reid study released this week found that almost 59% of Canadians now completely avoid US brands, and another 85% say they now have or plan to replace Canadian substitutes for American goods. It's not symbolism here. The cost of this fundamental change is already in the billions. The story is revealed by the numbers. Because Canadians simply stopped purchasing, more than $2 billion in U.S. exports vanished in the first half of 2025, not as a result of new trade agreements or sanctions. Car traffic on the Crossbar has decreased by 23% so far this year, and U.S. tourism revenue is expected to drop by $2. Over 14,000 jobs are at jeopardy, and $1 billion is lost. The U.S. Travel Association claims that one hotel half of our reservations used to be for Ontario plates. The manager in Buffalo told CBC News last week, "When Canadians stop coming, our weekends go silent." This silent boycott's political origins date back to February 1st, 2025, when President Trump slapped 25% tariffs on Canadian steel and aluminum. In April, the tariffs were raised to include consumer products and automobiles. Ottawa quickly replied. The government of Prime Minister Mark Carney declared selective export prohibitions and counter-tariffs. Canada will not be intimidated, Carney said in a scathing address to Parliament. Nowhere is this more evident than on store shelves. In March 2025, the Liquor Control Board of Ontario and regulators in other provinces delisted American spirits completely, causing a 66.3% collapse in whiskey sales in the United States and a nearly 13% decline in total liquor sales in Canada. If Washington taxes our industries, our consumers will respond in kind. This response has transcended politics and become a grassroots movement. This is worse than a tariff. Once you lose shelf space, you may never get it back. Beyond alcohol, the ripple effects are devastating. Canadians have canceled trips, canceled U.S. streaming subscriptions, and demanded clearer labeling in stores and apps. Apps like Buy Canadian now allow shoppers to scan barcodes to avoid U.S. goods. Once untouchable major brands like McDonald's, Amazon, Tesla, Coca-Cola, and Nike are suddenly facing the next domino to fall is tourism. According to Statistics Canada, outbound U.S.-bound travel booking for the summer of 2025 fell 70% from the previous year, and Canadians, who make up the largest group of international travelers to the United States, are staying home or traveling abroad instead. In upstate New York, local chambers of commerce estimate regional businesses have already lost over $1 billion in tourist revenue. One tour operator in Niagara Falls acknowledged, "The buses from Ontario simply stopped arriving, but we didn't think politics could affect us." Hotels, restaurants, amusement parks, Broadway theaters, and even casinos in Las Vegas were all impacted by Canadian travel cuts. In July, Delta Airlines earnings calls revealed a 15% decline in Canadian passenger revenue, and Caesars Entertainment in Nevada warned of an unprecedented weakness in Canadian bookings. The U.S. Travel Association has now issued a rare red alert warning that if the boycott continues into 2026, as a Toronto consumer told the Globe and Mail, "We are not waving signs or blocking highways." For U.S. corporations, the trust collapse is unprecedented. Up to 45,000 American jobs could be lost. We are simply purchasing locally rather than from Amazon or McDonald's. Each purchase counts as a vote. The data supports her. Due in major part to poorer Canadian performance, McDonald's Canada announced one of its worst quarters since 2020, with sales falling 3.6% globally. Franchises have discreetly reduced orders for Idaho potatoes, causing U.S. suppliers to delivery delays doubled, Prime subscriptions dropped, and domestic e-commerce rivals like Shopify surged. In January, Amazon announced it would close 7 warehouses in Quebec, laying off 1,700 jobs in response to union pressures and declining demand. By mid-February, surveys revealed 41% of Canadians intended to reduce or stop using Amazon entirely. In April, a packaging plant in Missouri laid off 200 workers, blaming the Canadian pullback. Status symbol in Canadian driveways is currently facing political challenges. According to an April poll, 71% of Canadians support a moratorium on Tesla sales. Cybertruck orders in Quebec and Ontario fell, with cancellations exceeding 30% in some markets. Heinz Ketchup Long, a Canadian favorite, has been replaced by French's on store shelves, particularly after Heinz closed its Ontario plant in 2014. Oreo faced outrage when customers found packages labeled Made in Mexico, causing Canadians to boo. In Ontario, surveys indicate that over half of households considered canceling U.S. platforms in early 2025. At the same time, Canadian youth groups launched campaigns against Nike citing labor practices, with hashtags like Choose Canadian trending across Quebec and Ontario. Even U.S. cultural exports are losing ground. Streaming platforms like Netflix and Disney Plus have seen subscriber losses after years of price hikes and restrictions on password sharing. What makes this boycott unique is its quiet power. There are no rallies, no noise, just a collective, as financial group economist Doug Porter said on August 21st. When your closest neighbor and ally starts decoupling, it signals risk for every other partner watching. This isn't just about tariffs anymore. It's about trust, and once trust is broken, it's almost impossible to rebuild. The shift in consumer behavior that's ruining balance sheets has prompted economists to warn that this erosion of trust could have long-term effects on the U.S. dollar's dominance, capital flows, and American soft power abroad. The travel boycott is real, is costly, and, as we have seen, it is changing the very economics of U.S.-Canada relations. Canada is the loudest political weapon in the world, and every trip cancellation and streaming subscription is a rejection of U.S. influence. American companies now face the terrifying question: is this a temporary flare-up or the start of a permanent reset in global consumer loyalty? Because if Canada, America's most familiar neighbor, can unplug so quickly, the rest of the world might be next. What started as a quiet choice at the checkout line has escalated into factory layoffs, warehouse closures, and a full-blown crisis of confidence for American brands. In early March 2025, Reuters confirmed that provincial regulators across Canada pulled U.S. spirits from liquor shelves, citing retaliation against Trump's tariffs. From Toronto's liquor stores to Vancouver's bar menus, the absence of American whiskey and bourbon was accompanied by a deeper crisis that goes beyond tourism and canceled road trips. Then came the fast food industry, where McDonald's Canada recorded its lowest quarterly performance since 2020 in late April, and comparable global sales fell 3.6%. Brown-Forman CEO Lawson Whiting described it as worse than a tariff, telling investors that when products disappear from shelves, billions in annual export volume can vanish overnight. Whiting's warning was not hyperbole. By April, U.S. spirit sales in Canada had fallen by 66%, forcing American distributors to write off hundreds of millions in unsold stock. A packaging plant in Missouri confirmed furloughs for 200 workers in May, and one farmer in Idaho told Bloomberg, "We used to ship truckloads north every week." The impact quickly spread, with executives directly blaming tariff uncertainty for eroding consumer confidence. Canadian franchises cut potato orders from Idaho, and suppliers in the U.S. Midwest began canceling shifts. Now, sending half a cargo is lucky for us. This is the sound of cash registers operating, not protest drama. The tariffs implemented in late January were the catalyst, but what followed is a widespread consumer movement that has turned brand loyalty into an act of resistance. The repercussions go far beyond liquor and fries. Store managers report steady foot traffic, but sharp declines in sales of U.S. brands. Apps like Buy Canadian, which scan barcodes to identify local products, have surged in downloads, subtly steering everyday shoppers away from American goods. Full-time jobs, and an additional 250 seasonal positions, citing union pressures and declining demand. The company said that prime delivery delays in Quebec had doubled within weeks. By mid-February, an Angus Reid survey showed that 41% of Canadians intended to cut back or stop using Amazon, and 78% promised to prioritize Canadian goods. This not only hurt Amazon's business model, but also helped domestic e-commerce rivals like Shopify, which reported a 22% increase in Canadian transaction volume during Q2 2025. Tesla has also been hit hard. Due to trade tensions and the perception that Tesla embodies American corporate arrogance, Canadian EV buyers are increasingly turning to domestic and European alternatives, such as Volkswagen's ID series and Quebec's Lion Electric, undermining Tesla's growth ambitions in North America's most eco-conscious markets. In April 2025, a Ledger poll revealed that 71% of Canadians supported a moratorium on Tesla's sales. Cybertruck order cancellations in Quebec and Ontario also spiked above 30%. Heinz Ketchup, once a mainstay on every Canadian table, has lost market share to French's and other local brands. The boycott is intensifying the backlash, which is partially due to Heinz's 2014 closure of its Ontario plant, which Canadians still remember, and it is solidifying French's dominance in ketchup sales. In a similar vein, U.S. citrus and soda exports to Canada have drastically decreased. In March, Reuters reported that several Canadian retailers canceled truckloads of U.S. oranges. The decline in trust is also evident in the cultural and digital sphere, as Canadian cancellations of Netflix, which is already facing criticism for price increases and its crackdown on password sharing, have increased dramatically in 2025. A February survey revealed that more than half of Ontario households were considering canceling Netflix, and discussions on Canadian forums shifted to Disney Plus and X. These cancellations are not just about saving money. They are also about values, as Canadians increasingly frame their subscription choices as symbolic acts of independence from U.S. platforms. And shoe behemoths have also been impacted. Nike's brand favorability in Canada has fallen 18 points since January, the steepest decline in over a decade, according to a July Ipsos report. In May, Canadian youth groups launched campaigns against Nike, criticizing its labor practices abroad, and social media movements encouraged buying locally made clothing, even at higher prices. A 19-year-old activist in Montreal told CBC, "Every dollar we spend is a vote. We'll switch stores if Nike doesn't alter." The durability of this change is what worries Washington the most, and retailers are adjusting. According to Jimmy Jean, the economist for Desjardins, on August 21st, tariffs may be temporary, but once consumer trust is lost, it is nearly impossible to regain. This is not just about tariffs, it is also about perception. A soda is no longer just a drink. It is a choice between loyalty and sourcing strategies. Canadian grocery chains are stocking French's over Heinz Hive, over Netflix Royale, over Pampers. The wider ramifications are staggering. American cultural power, once considered untouchable in Canada, is eroding. Subscription cancellations are weakening U.S. digital platforms. Food brand boycotts are reducing export volumes. A streaming subscription is not just entertainment. It is a declaration of independence. And a pair of sneakers is now a declaration of ethics rather than fashion. The growth of Tesla is being slowed down by auto cancellations, and the U.S.'s dominance in e-commerce is being undermined by the silent withdrawal from Amazon. One by one, the symbols of American capitalism are being overthrown, not by clamorous protests, but by quiet Canadian wallets. This begs the larger question. If Canada, America's closest neighbor and ally, can leave so quickly, what about Europe, Latin America, or Asia? Will this consumer revolt spread around the world, making once dominant U.S. brands obsolete? This week, a top trade official in Ottawa stated frankly, anyone can unplug if Canada can. Tariffs may have served as the match, but the current conflagration is consumer behavior. Furthermore, once started, wildfires spread across borders. The days of unchallenged American brand supremacy are ended. It's unclear if U.S. businesses will ever be able to regain the trust that has been lost, or if this boycott is the first step toward a global shift in how people perceive the U.S.